Welcome to the Times of Industry show. I have a phenomenal show at a phenomenal time. Gold is hitting at the spot 2050 as I'm doing this interview, 2050 an ounce. Silver over 27. The gold silver ratio is at 75 to 1, it was 123 to 1 just a couple of months ago. And it's a phenomenal time to be speaking with David. David runs juniorminerjunkie.com. A great URL, and he's an analyst. He gets covered on Kitco quite a bit every week, and he has a phenomenal letter. Let's get his takes, and he's here with us for the first time. David, thank you for being on the show. Let's talk about what's happening with gold. It's a phenomenal move that it's done. Is it a bit over? Is it too much? Are we due for a correction? Or on the flip side, will this attract many more newcomers that don't have gold, and this thing will shoot up even more? Or is this only true for silver? I mean, do you see decoupling, or are they going to move in tandem? Talk to us a little bit about gold, silver, and everything in between.
Wow. Well, yeah, it's been due for a correction quite a while, but ever since the price moved above 1750 on a weekly closing basis, there's been a swap dealer short squeeze going on. So the price keeps going up in a runaway market here. And also you're seeing a decoupling of you're seeing people getting into ETFs as opposed to futures. So that is taking place. I mean, you're seeing record deliveries taken on the COMEX. You're also seeing, even though the price continues to go higher, speculative positions in the futures market are not going higher with it. So that's interesting also. So as people continue to lose faith in all these currencies around the world, and especially the US dollar, as they continue to just create stimulus and print gobs of money. I mean, they're about to send out another stimulus check to people here. With gold and blue sky territory, there is no resistance anymore. So I think you're really going to see a lot of volatility. So as you said, I mean, it's overbought here. It's extreme overbought here, but it can remain overbought as people continue to pile into gold and see the headlines that it's at all-time highs. I mean, basically anybody that's ever purchased an ounce of gold is in the money. And the last time that happened was the blow off in 2011, which was a blow off. But now this is not a blow off. This is a continuation of a second phase of a secular bull market that began at the turn of the century.
That is amazing. And you know what I love about that? I love that the yield on the 10-year is, in real terms, the lowest, the most negative it's ever been. Right. And in 2011, when gold peaked, the rates are already bottom and started to go up. So you had, if you weren't, if your head wasn't into the bubble, you could have seen some. And here it looks like it's the central banks have told you we're not going to raise rates. So literally, inflation goes up, this is going even more negative.
Oh, yeah, it's incredible. Even the Fed's come out and said, basically, he said it a few times. He said, we're not even thinking about raising rates. So I mean, the Fed is doing all that it can do, and they're trying to egg on Congress to do all they can do to keep piling on more and more stimulus and money into the system.
Perfect for us. Okay, I want to ask you this. In 2011, when they last peaked, the dollar started a bull market that went on for about 10 years against other fiat currencies. It literally, about 2 or 3 weeks ago, started a bear market after 10 years. So, historical bear markets for the dollar are about 4 to 5 years. So this is a huge deal, and we've seen silver reacting immediately to this. In your opinion, in terms of risk reward, is the best situations right now in gold, in silver, or in gold miners, or in silver miners, or in gold development companies? Where's the best risk reward that we can find? And if investors just want to diversify among all of them, can you give like allocation sizes or something that is, that you think is is the right way to go?
Well, Lear, I'm concentrated in three areas right now of juniors, three subsectors of juniors. I'm in growth-oriented producers, smaller cap growth-oriented producers, the junior growth-oriented producers who have high margin deposits in top tier jurisdictions and with upside growth. And I'm the next sector, the subsector I'm in is developer explorers. That's juniors who already control a defined deposit, a large defined deposit that is also maintained, that is also contained in a safe jurisdiction that is in a district scale size land package with blue sky potential. And the management teams, it's very important that the management teams need to be serially successful. They have access to capital. They've done this before. They don't over dilute. They've got a lot of shares in the company themselves, and it's always good to ask them how much they pay for their shares. And the next subsector is the drill play. I don't like to put a lot of money into drill plays because all you need to do is hit a couple of them, and they can go up quite a bit. But they're extremely risky. So they're high risk, high reward. So the drill plays, though, I mean, you got to really do your due diligence in them and make sure the management team is top notch and they're cashed up. And most of these drill plays have been cashing up lately.
I want to talk to you next about how to look for the right management teams. What's the way that you assess teams, management, CEOs, etc.? How do you look at them? What type of work do you do? Do you call them? What kind of questions do you ask? How do you really come down and say, okay, I just spoke to this person a few times. I think he's this, and this, and
Right.
therefore, I'm ready to invest in this company, etc. What kind of work that goes on behind the scenes? Do you even talk with CEOs personally, etc., etc.?
Absolutely. Yeah, so that's great information to have and very necessary. I mean, with now in the age of COVID, I can't go to conferences anymore. I can't talk to these people face to face, which is really too bad, because that's when you really get a feel for somebody. But the first questions that I normally ask is, how much do you own of the company and how much did you pay for your shares? And of course, I look at their track record. Have they gone from discovery to development to possibly pre-production before they sold a company successfully and made shareholders a lot of money? That's a big one right there. And you look at their past. You also get a feel for what kind of person they are when you talk to them, especially in person. I can't do that anymore, so now we have to do it via Zoom or we have to do it on the phone. But yeah, it's very important that the head of the company has also done a good job in creating a successful management team and putting the right people in the right places, and most importantly, lets them do their job and doesn't micromanage. I mean, that's very important. So I try to talk to as many of the management team, as much of the management team as possible. And once you start talking to them, you get to ask questions that you don't even think about asking before. I have a list of questions that I have, and then I always end up discovering more after talking to them. There's a lot of lifestyle companies in this space. There's a lot of very shady characters, but on the flip side of that, there's a lot of great people who have done this before, and they're really good at what they do. And once you find those people, you get into those companies.
Okay, David. And so what I really want to ask you next is, in terms of how you look at your gold silver portfolio compared to your general portfolio net worth. How much you put into the stock market and then into the gold sector? Do you also do investing outside the stock market in other areas? Because sometimes people think that gold investors only invest in gold and silver, etc. And usually it's only like 15 or 20% or whatever of the entire net worth. So if you can't comment on that.
Sure. Well, since 2016, I've had most of my investment capital into gold and silver juniors. And basically, what my portfolio is, I've constructed my own ETF because I feel that the ETFs that are offered out there don't really give me a very good variety of the right juniors in them. So what I've done is I've basically constructed my own. I don't put any more than 2 to 4% of my investment capital into one junior. So I have up to 30 juniors in my portfolio at a time, and that's how many I have right now. So uh, I do a lot of due diligence. I talk to these companies a lot, I'm since my newsletter is completely transparent. You know, my subscribers know exactly what I do, and right before I do it, I give them a 24-hour notice before I buy or sell anything. And and also I send out a report on the company as as I give them an alert that I'm about to buy something. So this helps me also because it makes me a better researcher. It forces me to do the best job I can of doing as much possible research on the company as I can before I buy it, which is a tremendous help. So I've helped a lot of people, and in doing so, they've helped me with this service as well.
David, where can people check out Gold Mining Junkie and Junior Mining Junkie, and what exactly do you offer there?
Yeah, my website is juniorminerjunkie.com. It's junkie with a Y. And like I said, it's completely transparent. You know exactly what I buy, when I buy it, how much I made, how much I lost. All my trades are documented and updated each week. And as I said, I give a 24-hour notice before I recommend a stock, and I put all my own money into all the stocks that I recommend, and also that I write about in my Kitco articles, which come out each week on kitco.com every Friday.
David, in closing, let me ask you about juniors compared to the large cap. One of the things that I love about the mining industry is that actually, if you go with the big ones, it's not like with with blue chips in the traditional sense, like a Johnson Johnson or a 3M or whatever, which usually underperform the index. These ones actually offer phenomenal returns. So let me ask you, with indexing in the precious metal sector, is this something that most people should just consider doing? Look at ETFs and the more reputable indices and just stick with them instead of trying to find the one.
Well, it all depends on how much research they want to put into it. You know, if they don't have a lot of time to research, they can invest in a newsletter like mine or somebody else's that'll teach them how to do this. And if they don't have time to do that, then I recommend them getting into big caps and ETFs. Definitely. I mean, that's the way to play it. But if you want to make more money in this sector, the higher returns do lie in the juniors, but you really got to know what you're doing. And if you don't, it's recommended to subscribe to a newsletter to teach you how to do it.
David, is silver going to an all-time high?
Eventually, yes, but eventually,
okay.
Absolutely. But
Okay.
in the short term, it's pretty overbought here. So I think maybe the highest it can go on this move maybe is 30, and then we'll see a pullback.
But it's going over
$30
50.
silver would be very nice to see. But this is a
Okay.
huge base it's broken out of. I mean, when you see
Okay.
anything break out of a 7-year cumulative base like the GDX, the GDXJ, and silver has, there's a lot of power in that base, and we're seeing it right now being unleashed to the upside.
Beautiful. David, thank you very much for being on the show.
Thanks for having me, Lear.